Hey, everybody, welcome back to the show. I'm really excited to have my buddy Bryan Powers with us today. It's actually his birthday today, so a special treat for us. But Bryan and I have known each other for years. Our ships have passed in the night a little bit, been in some groups together, and now he's a member of Investor Fuel and actually our investor machine lead generation company as well. But he has just tremendous experience in the turnkey space and fix and flip space, even in the multifamily space. And we're going to be talking about how to run your business with a very systematic approach today. Professional real estate investors know that it's not really about the real estate. In fact, real estate is just a vehicle to freedom. A group of over 100 of the nation's leading real estate investors from across the country meet several times a year at the Investor Fuel Real Estate Mastermind to share ideas on how to strengthen each other's businesses, but also to come together as friends and build more fulfilling lives for all of those around us. On today's show, we're going to continue our conversation of fueling our businesses and fueling our lives. I'm glad you're here. Hey, Bryan, welcome to the show.
Hey, Mike, how's it going?
Glad to be on. Yeah, and again, happy birthday, buddy. I'm excited that you. First thing I said is, are you sure you want to be spending time with me today on your birthday?
So. Yeah, no better way to spend it. You know, I'm 24. I've got a whole life ahead of me. So.
Cool, man. Well, enjoy your youth while you got it. So yeah, one of the things that we talked about up front here, and I'm excited to talk about this show today, is I came from corporate America. And you have some background. I'll let you share your background that allows us to think about our business in a way to where we really think about systems and processes and how we run our business like a real business instead of flying by the seat of our pants like a lot of real estate investors. So I'm excited to get into a bunch of those topics today. I don't want to steal your thunder yet, but hey, before we jump in, would you mind just telling everybody a little bit about your background?
I'd love to. So I started in restaurants. My family moved from Chicago to the Springfield, Missouri area in 1990. And I got my first job with my dad's McDonald's at age 14. He put me right into the stores. And from then on, I thought I was going to be a restaurateur. I was for 22 years. That's what I did. I've owned a sub shop franchise. I've owned a live music venue, owned a recording studio in college. I play music and record music, and always kind of had that passion. And what really got me into real estate was a dentist buddy of mine in a dinner. He said, I'm reading this book called Rich Dad, Poor Dad. So it's so cliche. But he said, you ever read it? I said, no, I've never heard of it. He said, you're the kind of guy I think would like a book like this. And at the exact time, I was going through the next generation process with McDonald's Corporation to become a full, what they call a P1 owner operator, where you can own over 50% of a store. You can now own multiple stores. So I was going through that process, and McDonald's is they're looking at 6 pillars of what a owner operator must look like before they get approved. You can't just be the owner's son and move in. And so I was really trying to impress them with what I was doing financially behind the scenes with McDonald's. Because they want people that have at least $1 million net worth. At the time, I did not have it. And so I was trying to figure out how to create that outside of that, and read the book and just knew instantly, within the first 20 pages of the book, that's what I wanted to do. So jumped into Cash Flow Quadrant, read another book by a guy named Gary Eldred. That was the true book that changed my life, because I like math, I like spreadsheets, I like projections. I'm an Enneagram 7. I like looking into the future. And so it really was it was an eye opener on what you could actually do leveraging real estate and the 5 different ways that you can make money in real estate when you really look at the cash flow side, the depreciation side, the principal reduction side, and all these elements that go into getting a return that I didn't think was humanly possible. I was trying to get a double-digit return and cross over the 10% mark with my investments. And you start reading some of these books, and you're like, here's a 30% or better. Here's a way to make an infinite return. And that's kind of where it started for me. Within about a year of real estate investing, I was about 7 hold units in, and thought about, what if I did this full time? I kind of got sick of the idea of you know, maybe being a restaurateur my whole life and thought, hey, what if I was a real estate investor? What if I devoted all of my time into this? What would it look like? And very quickly, we decided to sell the stores. And I ended up, I had some ownership in some stores at that time and took my winnings and merged with one of the larger companies in the Springfield, Missouri area. And we took my company's name and tripled in size in our first year. Built a property management company, a real estate brokerage, a turnkey acquisitions company, a wholesale acquisitions company. The property management was one of the bigger legs of it. And in our first year, we took down basically a large operator who, Mike, I believe you know who it was. We won't say the name, but was for closing on a bunch of properties, and the banks didn't want to foreclose. And we basically assumed the note. So we took over 187 units and took ownership of them without putting any money in to purchase them. We assumed the existing note and then raised capital with some investors to rehab those properties. And so we went really big, really fast. And that's kind of, I can share the neat, really pretty part of that, but I can also share the behind the scenes of why I don't grow at that pace anymore as well. Because, one of the unique things I think after being in McDonald's for many years is with the 8th best training system in the world's history, and a lot of the systems and management routines and training that you get as part of becoming an owner operator is you really cannot predict where you're going unless you know exactly where you're at. And so as I separated from that old company, and I'm still partners with those guys. We own 250 rental properties together. But we were 3 visionaries trying to run a company with 20 employees that was growing 100% a year. And there's another saying I heard: go slow to go fast, and get it right, and then you can grow at a faster pace. You've done it the right way. So my partner Zach and I now, we focus really heavily on systems and routines, and have adopted EOS into our system, and have created a system that really allows us to accurately report to our investors what's happening in a real-time basis at any given time. So
yeah, that's awesome. I know your background with McDonald's. I mean, that's the reason that franchises are so popular. Is it's in, and they're not all the same. Obviously, McDonald's is very high up there in terms of obviously they've grown to one of the largest franchise systems in the world, but just the systematic approach to everything. There's basically a process for everything. It's well documented. Everybody knows how to do those things. And, I take some of those things that I learned. I came out of corporate America. I refer to myself as a corporate refugee. And when I left corporate America, I'm like, I'm never going back. But as time kind of went by, and I got a little bit of more wisdom, I saw the benefits of everything that I learned in terms of departmentalizing, having systems and processes for things. And, I've always believed that even for folks that are listening to this right now that are a one-man band, a husband-wife team, 2 brothers working together, 2 partners, small companies, small businesses, right? Compared to certainly a McDonald's franchise system or a Fortune 500 company that I worked for. But you still need to structure your business the exact same way. You've got sales and marketing, you've got business operations, you've got finance and accounting. Like everything has those same departments and a same series of processes. The product is different, the widget's different, but the approach to everything has to be, structurally very similar, right?
Very much so. Yeah.
Yeah. And you said, and that's what I'm hoping people get. That's why I'm excited about to talk to you. It's always good to see you, of course, but I hope that people get a lot of value out of thinking about their business differently, because, in Investor Fuel and all the things that I'm a part of, we're really surrounding ourselves with people that are trying to take their business to the next level. And so we talk about stuff like this, right? But a lot of us started as flying by the seat of our pants and saying, well, we'll figure it out as we move along. And there's always some element of that. When you're an entrepreneur, you kind of have to, you can't wait for perfect. But I think that systematic approach to like, okay, how do we do this? And how do we do this in a way to where we can scale it and do it over and over again? Because we're trying to build businesses here. Otherwise, it's back to the cash flow quadrant. You're at best, you're in the self-employed quadrant, right? And you're basically, the job owns you, right?
You bet. Yeah, absolutely.
Yeah.
Yeah, and that's what we've really seen. Just trying to navigate through this in real estate. You go from a system where you just have to follow the book and everything falls into place. The golden arches system. And before starting real estate, uh, I had good access to my time, and I had 230 employees. And so it was scaling back down and saying, now I have 6 employees, but I'm just totally overwhelmed. Like, why is this?
Yeah.
Why don't we know where things are at? We don't know what our KPIs are, and we can't find any of the information, and just plugging it into a system where there's accountability, really in the beginning, to just build the system. I think that's what so many people struggle with, including myself, is you just, where am I going to find the time to stop and focus on the system that I need to build, so that I'm not just chasing my tail? Because one unique thing about real estate is you can have no system there and you can still make money, but you
Right.
cannot scale a real estate business, and grow it, and without, you're really risking bankruptcy at a certain point, right? I mean, if you try and grow too quick and you don't have the systems in place and you're not watching where things are going in your KPIs, you can make money small, but the second you get big, you can easily toast yourself.
Yeah.
So,
And I was thinking about this. I don't know what I was thinking about this when I was driving into the office. I was thinking about, there's always this case for growing bigger. And there's a lot of real estate investors that make a good living that, and I'm not saying anything negative about anyone. Okay. I think we all got into this for some level of financial freedom. Like we can make more money, but also time freedom, right? So we can take vacation, we can travel, we can spend time with family, we can focus on charities or things that we care about, right? And there's so many that get stuck in this situation where they're making more money than they made in the real world, I guess.
yeah,
But they don't have that time freedom because they're stuck doing everything in the day to day. And part of it is because you might do 2 or 3 deals a month and make a really good living. I mean, that would probably, in almost every market in America, be above average household income, maybe 2, 3, 4 times that, right? But you don't get your time back. You're still stuck doing everything. So the case for scale is the more resources you get, you have money to hire people. You have money to, hire a consultant or have somebody kind of walk you through the EOS process to get some systems and processes in place. And so the case for scaling up is not about making more money. It's about getting your time back, right?
sure, absolutely. And having that business that's growing whether you're there or not,
Yeah. Yeah.
is valuable. And I will say, I mean, just what does that look like in the real world? When we built that company very quickly, overnight, we had about $50,000 a month in overhead. And most people are going to be very comfortable making $50,000 a month. So if you have no overhead and you can pull that off, then that's great. If you do have $50,000 a year of overhead, or a month of overhead, you've obviously got to be doing an immense amount of deals. And then you're also taking a risk that if your deal flow drops, well, now you have this fixed expense of G&A that's $600,000 a year that you have to
Yep.
overcome.
Yep.
So a lot of people just aren't willing to kind of step out of the box and take the risk, and quite honestly dial into the metrics, like you need to get to that level.
Yeah. And there's a lot of us that are, visionaries too, right? And the challenge is you have to have that implementer, that integrator, that operations mindset in your business as well. And that's the other case for scale. Another case for scale is to be able to have a partnership that has a skill set that complements you. And I think a lot of, folks have gotten into business, whether it's real estate or other things, with their like college buddies or somebody that's just like them, the type of person you want to sit down at the bar with and have a drink and talk about stuff. But the best thing to do is to find somebody that's kind of a yin to your yang. I know you have that with Zach, but maybe can you share some thoughts on, part of a systematic approach to your business is having the right people on the bus, right?
I mean, you couldn't have said it better. I mean, I can't function at all without a Zach in my company, and I hope anyone that's a visionary has their Zach. And I've talked to a number of people about this, but we were at an event recently where we got to meet somebody else's integrator, and just it really is. They're almost polar opposites, right? I'm sitting here on an interview with you talking, and Zach is behind the scenes crunching numbers, sweating a little bit, but he's building the team below him. He's watching everything that's happening. I always say I'm a great starter, but I need a great finisher.
Yeah.
As a visionary, I think most of us are like that. Like I see the vision, I get real excited about starting things, and once it's kind of going, somebody else just has to kind of run that day-to-day routine. Well, a good integrator, they don't want to look at anything in the beginning. It scares them almost. You have to create that, and what they want is to manage that system that you're kind of building for them. And fortunately, my partner and I have known each other since the 8th grade. We know each other very well. There's a mutual level of respect and understanding. We've worked together now for the last 7 years. So we actually partnered in 2014, and we know each other. Like he doesn't want to spend any money, but I know I call it investing. He calls it an expense, right? And so that's where that kind of yin and yang go head to head. And but it's good, because if it were up to me, I wouldn't be looking at all of that stuff that he's looking at. I'll sell the KPIs, but he's looking at the day-to-day bank account and making smart decisions, and he's kept me out of a ton of fires because I just want to go, and he's I'm the gas and he's the brakes. It's you got to have that.
You have to have them both, right?
Yeah, got to have both.
Yeah. So one of the things I know you guys do a lot of holding, and you wholesale and you fix and flip, but your goal is really to build wealth through buy and hold, right? And I think again, there's a lot of other newer real estate investors that don't do enough volume to be able to keep. They just like, well, I need the money now because I have to pay for advertising or I have to pay for some of my costs. And when you're doing a deal or two a month, you can't always keep one. If you're doing 5 a month, you might be able to keep 1 or 2 if you're playing the game right. And so maybe talk a little bit about kind of, and I think, I was talking to you up front. I had another friend of ours that's in Investor Fuel. We were talking about how some people have asked me recently, and we've probably all been asked, can you sell a wholesaling company? And I was like, well, there's really not a lot of assets. You got your inventory, but the knowledge is probably mostly in the owner's head. And the teams are small. So the transition to a new owner would be probably devastating. And none of us really have proprietary systems. We're using off the shelf, Podio platforms or whatever, which are great for us, but what is the asset you'd be selling? Right. And we were talking about that recently with TJ, and one of the discussions was, well, the real asset that we build in our business is that we're putting stuff aside, which is buy and holds for us, right? That's how you really build wealth. Because I think all of us want to build a business that we can make money off of without getting out of bed. And I know that buy and holds are never passive, right? We kind of know that, but that is the asset that you can leave behind, is the buy and hold property, right?
I definitely agree. And we do wholesale and we do some fix and flips. And I always say there's an income part to the business, and then there's a passive cash flow part of the business, your active income and your passive income.
Right.
And, sometimes I got to look at my active income and say, I'm just like any other human being. I need an income. I got bills to pay. We got wants and needs. We got charities and stuff we want to donate to. And, we want to make our impact. But over here, I want to build this cash flow thing, and in order to do that, you've got to almost look at it as 2 separate businesses. So the income side actually feeds the passive income side. So we do the wholesaling and fix and flips and whatnot out of necessity that covers whatever income that we need. But I think one of the things that we do that might be a little bit different than the way some people do it is we create what we call partnership LLCs. So we have a very specific avatar, very specific box that we look for. Somebody that would want to partner with my company's Gen Ent Investments and Zach and I's company. And so we look for the specific investor that's willing to put $500,000 with us, that trusts us to do it. We don't want somebody that's in it managing every little thing that we do. We always report anytime we buy a house or sell a house. We give monthly reports. We show them how their money is doing. But we create a partnership LLC where they own 25% of the portfolio. They do go on paper with us. So one of the other parts of the avatar of this box of investor is that they've got a $10 million or better net worth and willing to put in about $500,000. So or more. We'd always take more, right? But Right now, I mean, that allows us to only have 3 key investors that we work with. They've got enough money with us, enough trust in us. We've built these relationships. 2 of them came over when my partner and I moved from our old company, and they just know us and they trust us and they like what we do. They like the fact that they can get a little bit of income, because if we make income, they make income. If we create a passive opportunity, they get that passive opportunity, and that portfolio grows with them. But then, that's all kind of plugged into this operational company. And we have a system that's very specific on how we operate and try and raise that capital with those investors
Yeah.
as well.
And again, it's a very systematic approach. Without getting into a lot of details there, I'm sure that the reason that those investors trust you is you have a very systematic approach to how you do things. It's franchise-esque, right? It's got like, this is exactly how we do everything. And that gives people a lot of confidence. I know, I know you've done some stuff in the multifamily space as well. And there's a lot to learn that you can learn from the multifamily space, the team-based approach, raising money and all that, and apply it back into single family, right?
It is, yeah, and we don't. It's our system is similar to a syndication, but different.
Yeah.
And really, the way we explain it to, if I'm talking to an investor and we're sitting in front of a whiteboard, we draw a system that we call PELT onto the board. It's pace, equity, leverage, and team, and those 4 elements are what get a return on investment to our investor. So obviously, if our target is a 4-month turn, so when they put money in, we purchase a property, we fix it. Within 4 months, hopefully, we've got the property sold, either turnkey, retail, or we decide to refinance it and put it into a portfolio. The money frees back up; it goes back into the next asset.
Mhm.
And so, if we can get an 8% ROI for our investor on every deal, that's great, because we can do it 3 times in a year. And next thing you know, that investment turns into a 15, 20, 25% ROI for our investor. So pace is super important. Equity, obviously, buying properties that already have equity in them. So just like any other investor, our target is typically distressed properties. We could buy them at pennies on the dollar, put some money into them, end up with an equity position in the end. Leverage is the 3rd pillar. So obviously, if you can leverage, let's take $100,000 and you can buy 1 property, or you can leverage it and buy 3 properties. Even though your ROI on the 1 property is a little bit less, it's at least double, because you've now leveraged that money. And then the 4th one is team. The team that we put together, we run where I used to have 20 employees in our last real estate investing company. We built this company to where we don't need as many employees, and we partner with instead of trying to build the best company in the industry, we find the best property management company. We find the best title company. We find the best realtors, the best wholesalers. Even we buy from other wholesalers,
Yep.
As well as having our own wholesale company or acquisitions company. So team is super important, and when we can properly leverage those 4 elements, we can really do well for our investors.
Yeah, that's awesome. That's awesome. Well, I think sometimes it's just it comes down to just thinking bigger too, right? I mean, I think your background with McDonald's and the corporate world, the franchising type world, plays well into thinking bigger. Like, how do we do things bigger? And a lot of real estate investors, I think too small. I mean, probably most people would say I'm a big thinker, but I often ask myself, am I thinking too small about this or that? And
Yeah.
I think everybody should sit down, whether it's with a cup of coffee or a margarita or whatever it might be for you, and just like somewhere where you've got 5 minutes to think and just say, am I thinking big enough? What can I do to take this, whatever I'm doing, to the next level? So, um, in terms of thinking big, we've got a bunch of those big thinkers like you that are in the Investor Fuel Mastermind. We're super excited to have you as a member of the group. Would you mind just kind of sharing your thoughts on Investor Fuel? You've been a member for a little while now. We've known each other for years. We actually met in another mastermind. We've known each other for quite some time. Would you mind just kind of sharing your thoughts?
I love it. I have nothing but good things to say, and that's in full transparency. We got to a point last year where after COVID, I run a couple other companies that are not real estate related, and one of them kind of pulled us out of real estate for a little bit. When we came back in, very tough to find inventory. I was not actively in a mastermind at the time, and Mike and I, of course, have stayed in touch, and I'm always really impressed with Mike and just how he operates, and really a true passion for education. And I knew he had a bunch of guys in the room that were doers, that were building acquisitions companies. We needed to build one inside of our company. And this is November, where I say I'm either going to go be a car wash franchisee and jump ship completely, or we're going to build up this real estate company and do this again. But I need to know how to do acquisitions right again. It's been a few years. And I mean, I went to the first Investor Fuel meeting, I think in November of 2020. And I mean, I can't even describe how, I think I took 13 pages of notes. I mean, I was writing down everyone's KPIs, and it was amazing what people were doing in the room. And we literally took what I learned in that room, started an acquisitions company, hired on a team in December, went through a training with another gentleman in the room. We kicked off our direct marketing January 5th of this year for the acquisitions company, and are scaling unbelievably fast. I mean, I've started a lot of companies, and I would have to say this is the one that's gone as planned, better than any other company I've started. And I honestly have to give it to Investor Fuel for that. I mean, we copied and modeled what other people were doing in the room, and it's been awesome. I mean, there's a ton of support. I think I've made a lot of very quick friends in the room, just being to 2 events. I feel like super comfortable. There's some awesome guys in the room. We have a lot of fun, and have learned a ton and shared a ton too, back and forth. So I love it. It's phenomenal.
Awesome.
It's a great culture.
Thanks for the kind words. Yeah, at the end of the day, I mean, I think that's one of the beauties of Investor Fuel is you hear what somebody else is doing, and you can sit down at lunch or talk in the hallway or dinner or whatever and say, well, tell me more about how you're doing that. And it's really just modeling each other and trying to learn from each other's mistakes and things we've overcome. And I think because everybody in the room has, even if they appear to be wildly successful right now, they've had ups and downs, of course, and everybody does. And they were able to go ask for help from the group. And so it's just this well of knowledge you can pull from, and you're always happy to give because you've gotten so much out of the group. And that's how it's supposed to work, right? And that's we focus real hard on making that the core of what we do is giving. And when somebody's in need, like, help them. And when you have the ability to give, then give. That's just how it should work. So excited to have you there, my friend.
Yeah. So grateful to be there.
Yep. Hey, Bryan, so if folks want to learn more about what you're doing, connect with you in any way, what's a good way for them to do that?
Bryan, Bryan at GENENT investments.com. If anyone wants to connect directly, we're not big on advertising. We're not big on, if you go to GENENTinvestments.com, you're going to find our Facebook page, and probably not a whole lot of content on there. We're not big marketers when it comes to marketing our company, because we are very niche in who we choose in our investor model. But anyone that's in Memphis, Little Rock, Chattanooga, you want to partner and do some deals, certainly hit me up. I'd probably entertain doing them in my back door in Springfield, Missouri, but we're actually so established in these other markets, it's tougher to do a deal here than it is over there. But always looking to partner with new people. And
awesome. Sounds good. We'll add that down below in the show notes. So, Bryan, thanks for spending time with us today.
Thank you, Mike.
And again, especially on your birthday, my friend, I think that might be a first. I think I've done like over 1,500 interviews. I'm not sure if I've interviewed anybody on their birthday before. So it's an honor.
Wow.
It might have happened. Maybe I just didn't know, but
what are the chances?
Yeah. Well, everybody, hope you got some good value. At the end of the day, you should be running your business more like a business. And that's what we talked about today. I hope you got some good value from that. If you haven't yet, check this out. Go to investorfuel.com. You can learn more about our amazing community. In fact, we just announced here recently that we have some new groups for multifamily and commercial investors as well. We've coming up on our 4-year anniversary this fall. And we're primarily focused on single family investing, and that's still going strong. We have amazing groups there. But if you're a multifamily investor, if you invest in self-storage or mobile home parks, anything commercial like that, you should check out investorfuel.com. We got some new groups called the cash flow groups for commercial investors. So excited to hopefully meet some of you soon. Go to investorfuel.com to learn more. Otherwise, we'll see you on the next show. Take care. Are you an active real estate investor? If so, and you want to latch on to the power of surrounding yourself with over 100 of the nation's leading real estate investors, all committed to building stronger businesses and living richer, fuller lives, you should jump on a call with us to learn more about Investor Fuel. Simply visit investorfuel.com to get started.